market, which is down 185 points. 21,525 is where we're at. Rajesh Bhatia is now joining us. He's Chief Investment Officer at ITI Asset Management Company. Rajesh, great to have you with us here. Appreciate your time on CNBC-TV18 and congratulations. I think, assets under management for the mutual fund business have reached 6,000 crores. So it's a milestone, and here's to many more. Rajesh, you're someone who looks at, you kind of marry the macros and the micros. You've always done that. So do that for us right now. How are things looking with the run-up that we've had and, the sharp outperformance for the market here last year, the year before, actually for the last few? Where does it leave us as we begin 2024?
Great, Prashant. Thank you so much for congratulating us on that milestone. It just reinforces for us that we have a right to win in this market, and it kind of motivates us to kind of move forward. So as far as the question is concerned, look, the entire world is looking at India as the fastest growing economy and the most predictable story across the globe. And when I look at this market, what kind of encourages me is the breadth of sector participation, which tells me that the quality of the market is very good. It's a very strong market. It's in fact a bull market, right? And the second is the nature of the sectors which are participating in this rally, which is economically sensitive sectors: auto, NBFCs, banking, right, capital goods, real estate, etc., etc. Now, usually the markets are the leading indicator for the economy. And if economic sensitive centers across the board are participating, it actually portends start of an economic cycle. So we are in a bull market. We are going to be, this is going to be a long range bull market. So I'm pretty encouraged with the structure of where we are and what's to come as we move forward.
Rajesh, I want you to talk about this point that you made. There is value in large caps, but the India growth story is in the broader market. Now, even 3 to 4 months ago, valuations for most mid caps and small caps were higher than the historical levels. And yet, if you had not participated in it because of high valuations, you would have missed out on a phenomenal 30-40% up move in a very crunched period of 3 to 4 months. I remember so many mutual funds too had stopped inflows into the small cap funds, citing high valuations. So even though there is growth in mid and small caps, how should you, look at valuations here from now on? Should we be okay with higher valuations for some of these defense plays, railways, etc., which have been the darling of the market?
The conventional wisdom is that the mega caps is really where the value is. And while that is true, I don't think that's really where the India growth story is. My sense is the India growth story really started afresh now with this post-COVID central government reaction to kind of prevent a downturn. And they stepped up capital expenditure. So the fiscal deficit on investment, the fiscal spending on investment is at close to a 20-year high. And that's why you're seeing a lot of the capital goods, real estate, roads, railways, encouragement to PLI on defense, as well as electronic manufacturing services. That has become the leadership of the market. So if I were to look at the market, I would say the leadership is really in the capital goods space and the public sector enterprises space, which have also transformed themselves. And if you look at the cycles, we had a bubble between 2003 to 2008, and later stages being a bubble where, there was a lot of capital investment that took place. Now, because the bubble burst in 2008, 2009, then we had almost a decade of ennui in the capital goods sector. And that has started to kind of return to energy in the last 2 years. So these are long duration cycles. And after a period of ennui for 10 years, they are now only now starting. So this is a start of a cycle. Yes, valuations have gone up in these categories, but we are still at an early stage of this cycle. So my sense is that if valuations do correct, you must continue to participate in these leadership sectors, which is the investment cycle themes, as I point out.
Okay, so investment and capex, keep the faith in those themes. By the way, the market's now looking at a 180-point fall. The Nifty came close to last week's low. 21,515 is the low that we've made today. blame it on the banks, blame it on IT not providing support, or even other large cap names like Lever or Reliance. Nothing is really working out in today's market action, and days low on the bank nifty as well. Rajesh, as I see the screen today, good afternoon to you. As I see the screen, there's a lot of money coming off PSU stocks. Bank of Baroda is one example. You can argue the market's reacting to the business update. But even otherwise, NMDC, NALCO, Hindustan Copper, Central Bank of India, PSU Bank's actually a very weak place to be in. So when an investor sees days like this, I think the question that he or she will ask is this the kind of fall I need to buy into the PSU story? Or is this an indication that the good times are now coming close to an end? So I might as well start booking profits. What would you do, or what would you tell your fund managers to do here?
Stay invested. As we kind of just pointed out, that it has been a fantastic run so far. I mean, the last 2 months have been gigantic months, right? So it's very, very natural to expect some kind of profit booking to take place and some reversal to take place as well. But that doesn't bother me. Look, if you look at the what I usually worry about is if we are at a late stage of an economic cycle and if we are at a late stage of a valuation cycle. That's when you have real permanent destruction of capital, right? But here we are talking about a very early stage of the economic cycle. Of course, the valuation enthusiasm has gotten, thanks to the kind of multi-year story that everybody can see, the valuation cycle has become a little more expensive. So that will correct. But those opportunities you use to kind of add as you move forward. So as even for our mutual fund investors, we keep telling them the way to participate in India is really go through the SIP or the STP route and capture this leadership areas that we are talking about.
Hi Rajesh, good afternoon and congratulations on this feat of hitting that 6,000 crores in terms of AUM. If I'm not mistaken, in the last 12 months, I think the growth has been to the tune of nearly around 50%. So good on you, good on your team as well, but added responsibility now. I like the point you're making in terms of the equity markets could be nearing, the upper end in terms of valuations. But in terms of the economic growth, well, we're still at a nascent stage, which tells you that there's plenty of scope for mid and small caps to do well. But let's talk on one of the themes that you're talking about. The leader has been the PSU sector, and you're sounding pretty optimistic on that space as well. From the PSU basket, what do you like? Will you go with the banking names? Do you believe that defense is still more to play, railways? What would you look at? And we're talking about a 5-6 year horizon from here on.
So Nigel, thank you so much for your wishes. But I just want to correct, we have grown 50% in the last 9 months and have almost doubled in the last 12 plus months, actually 18 months. So we've had a fairly good trajectory as far as...
Good on you, Rajesh. Well done on that front. Just one quick clarification. This is a function of the market, or has it been inflows have got ramped up as well? Because the markets have moved up, so some part of that benefit would be of that. And then you can take us through the PSU theme.
Sure. So I think it's a function of both, the mark to market as well. I think we are primarily an equity fund house. And of course, because of the phenomenal run that we've had in the equity markets, we've had very, very good mark to market gains as well. Our gross sales has been fairly good. That's the number I have. I can't give you the breakup between mark to market and net new sales, but I know that our gross sales was also a very sizable number over the last 12 months or so. So I think it's a contribution from both mark to market gains and as well as good inflows that we've been receiving as a fund house. To come to your public sector question, look, I think, let us say, if I was just to focus on the power theme. Now, why I'm focusing on the power theme is, I think there is tightness in the power sector, right? So you would typically go from an underinvestment in power to an overinvestment in power, and which means that you're going to have probably a 5-7 year cycle. So, equipment suppliers, IPP producers, financiers, and these include public sector companies as well. I would say that you combine both. You buy the leadership of the market, which is capital goods, and you buy public sector enterprises in that category, and I think you'll come out fine.
Okay, I mean, that point about what Nigel also reiterated what you made earlier, which is the fact that the India growth story is in mid and small caps, right? Because I guess many large caps don't have those kind of businesses, right? I mean, where you can participate in many of the areas where the government is doing bulk of the heavy lifting in terms of spending, etc. So, you began by saying the consensus is that large cap has value and maybe there is some merit to it. Would you reckon that those looking for, alpha generation from large caps are in for some disappointment in 24, Rajesh?
No, I wouldn't say that. I mean, I would say that, of course, you're going to make equity type returns even in the large caps, right? But you're typically, let's say if the IT companies, large caps, probably they'll grow at 12% per annum, right? Some of the consumer companies which have been disappointing, today, probably they'll grow at about 12% as well. And, you'd have large cap banks, they will also probably give you 14, 15% kind of returns. But you're not coming to India for the 12% kind of or 14% kind of returns. The opportunity in India, now let me give you a data set. I took out a list of companies which are growing at 20% plus on a trailing 12-month basis on top line and bottom line. We found there are 200 companies with a market cap of greater than 1,000 crores. Now, so what is my job? I have to create a portfolio of 25 to 30 companies out of these fast-growing opportunities there, which is the India growth story, really, right? So, and our preference is to stock pick among these to find companies which are winning companies, which are gaining market share, etc. So I have to buy one out of these 7 companies. So that's my opportunity set. So I think, I would rather to play the India growth story, focus here than the mega caps, which will give you equity type returns, but I don't think that's really where the excitement is.
Thank you for joining in. Wish you all the very best. We need to slip into a break on that note. We'll come back and get you a few BTST calls from our technical experts.
For more news and updates, all you need to do is follow CNBC-TV18 on all of our digital platforms.